Hi, everyone. Welcome back to Wall Street Silver. Joining us today is our good friend, the founder of internationalman.com. He is also New York Times bestselling author, Doug Casey. Welcome back, sir.
Well, the pleasure is mine.
Yes, absolute pleasure having you back on Wall Street Silver. So, Doug, silver and gold have seen an interesting breakout this past month. Do you believe precious metals have sniffed out a Fed pivot? What's your thoughts?
Well, let's put it this way. For the last decade, gold has gone nowhere. Silver's really gone nowhere, quite frankly.
Hmm.
They're both very reasonably priced relative to other things in the tangible world. And my guess is that this year they're going to go above where they should be, quote unquote, because they're reasonable right now. Not cheap, not dear, but reasonable. Uh, and I think there's going to be a panic in the markets generally, and people are going to head towards these metals because they are real. They're not digital.
Hmm.
So not only that, but not it won't happen to silver, of course, which is mostly an industrial metal now. But I think that the world is well on the way to remonetizing gold, because none of these governments can trust each other's fiat currencies. So what are they going to use to trade and barter with each other? I mean, the Russians don't want to accept yuan. Nobody wants to really accept the ruble.
Right.
How do you trade with the Iranians? So it's going to come back to gold.
Do you think that's what the whole push for the BRICS nation is? China, Russia, and all of those countries to push for a alternative to the US petrodollar and move towards like a Chinese yuan backed gold? Or what do you think will happen?
Well, I think the dollar is definitely on its way out. The US is very good at shooting itself in the foot. And by confiscating the assets of Russians and the Russian governments, they've basically announced to the world, if you have dollars or dollar-based assets, uh, they really belong to us. If we don't like you anymore, we'll just take them away from you.
Yeah,
That's exactly what they've done with the Russians.
crazy.
And all these other countries realize that it could happen to them too. On top of that, it makes no sense for countries that are adversaries, like the Russians and the Chinese. They have in the past been using dollars to settle with each other. That makes no sense.
Yeah.
Using the currency of their enemy, where it has to clear through New York to trade with each other. It's insane. So the answer to the question is yeah, the BRICS are going to come up with something. It's going to be gold based. I hope it's gold itself. I mean, why have an intermediary? Why put a government in there? Quite frankly, government doesn't belong in the money business any more than it belongs in the school business,
Hmm.
or frankly, just about every business where government is today.
Yeah, you absolutely nailed it, Doug. So most of the markets are in disarray. We're looking at everywhere from the tech sector, stocks, crypto. Do you believe the stock market specifically can it drop another 20-30% from where we are right now? Or is the bleeding done?
No, the bleeding is not done. Look, it's good to keep these things in perspective. And the last really major market bottom occurred in the early 80s when interest rates, where the US government was paying 12 to 15%
Hmm.
for money, even more short-term money.
Wow.
Uh, for the last 40 years, we've had a bull market in stocks driven by dropping interest rates and other factors. So basically, we've had a 40-year bull market in stocks. They become very overpriced relative to everything else by dividend yield, book value earnings, participation of the public. Uh, Common stocks are not the place to be today. Can they drop another 20 or 30%? They could actually drop more than that. People forget that when the market crashed in 1929, by the time it bottomed in 1933, it had lost over 90% of its value.
Wow, that's crazy.
Yeah, the Dow went from about at its very peak. that it reached in September of 29, I think. It was about 385. By the time it bottomed in early 33, it was 35 roughly.
Wow.
So markets can go much higher than you can imagine and much lower than you can imagine. And right now, the market is still overpriced. So I'm bearish. I'm out of the market, completely out of the market. A few special situations, but no, you don't want to own.
No commodities or whatsoever.
No, I trade commodities, and I'm always looking for something to do, and everything from cocoa and coffee and sugar to gold and silver and copper. I mean, I try to pay attention to all these things and
Hmm.
take positions when I like something, or short it when I don't like it. But my main involvement in the markets now is going long precious metal stocks and other metal stocks, uranium, copper
Hmm.
as well.
Yeah, I was going to ask about that. Uranium, are you long uranium?
Mm, very much, because uranium is, well, nuclear power is by far the safest, the cheapest, and the cleanest form of mass power generation. That may shock
Hmm.
a lot of your listeners, but it happens to be a technological fact. Uh, the Greens, for many years, have gone on a jihad against uranium, which is idiotic.
Hmm.
It's actually a great, and especially if these people hadn't been doing these things, we wouldn't be using second generation nuclear power plants, big things that cost $1 billion or more to build. We'd be using small nuclear variable, not necessary to be serviced for 10 years. Uh, Small nuclear power plants, safe, cheap, all over the world. That's the way we'll go. Anyway, don't want to go on to a lecture about nuclear power, but right now uranium's about $50 a pound.
Hmm.
Marginal cost of production of uranium is about $50 a pound. Uh, it depends on the deposit and all kinds of things.
Right.
But to answer the question, the last uranium bull market started in about 2001. Uranium was $10 a pound. Over the next 6 or 7 years, it ran to $150 a pound.
Oh wow.
So at 50, where it is right now,
It can
I'm a
easily go to
buyer.
200.
I think it's
It's
entirely
entirely
possible.
possible.
I'm buying the shares of uranium stocks at this point. You've got
Interesting.
explorers, you've got developers, you've got a few producers, uh, and I have some of each of them. But you got to remember that most mining stocks of all types are crap. They really are. Uh, During the last uranium bull market, um, there were 5 or 6 decent uranium stocks out there in 2000, 2001.
Hmm.
By the time the market peaked in 2007, I think it was, there were about 400 or 500 that
Oh
had
wow.
uranium in the names on their stock certificates. So, and now most of them have disappeared again, but now is the time to be buying them.
Awesome. That's interesting. That's an interesting take, Doug. So CPI figures, they came out this month as of December 13th. What is it telling you specifically, Doug? And what do you expect going into 2023? Do you believe now that the Fed did the 50 basis point rate hike, that's it, or is there more to come?
Well, to start with, in the long run, the Fed doesn't really control interest rates. They control the money supply. Uh, Let me put it to you this way. Uh, in recent years, the US Fed has created trillions of new
Right.
dollars, and the US government is now running deficits of a trillion, $2 trillion per year. All of that has to be financed by the Fed.
Right.
That's the actual engine of inflation. Now, they say they're fighting inflation at the moment. And of course, how can they? Because if they don't finance the US government, who's going to buy its debt? I mean,
Nobody. Yeah.
they're between a rock and a hard place. So over this decade, I think we're going to see interest rates go back to the levels we saw in the early 1980s,
Wow.
15 to 20%. People have forgotten that within living memory, rates were that high. It'll happen again because inflation is going to be much higher. They've created trillions of new currency units that are out there. Now they're raising rates at this point because when rates are higher, it induces people to pay off debt, which in effect retires dollars, and not to take on more debt. So that's why they're doing that, and that's how inflation has come down a little bit. But interest rates are going higher over the long run. I'm not saying next month or 2 months from now, but I want to look, put it this way. If you own a bond, sell it yesterday morning if you can, but at a minimum, sell it tomorrow.
Yeah.
Bonds are a financial kiss of death because interest rates are going higher. Not only that, but the economy is in big trouble. You're going to find lots and lots of corporations and individuals and local governments later on that are going to go bankrupt, and their debt is not going to be paid. So it's probably more of an answer than you wanted to.
No,
Did
it
I
was
answer the
perfect.
question or
Yeah,
not?
no, it was awesome.
It's such a big question because interest rates are the most important price in the world, price of money. So it's sorry to go off on a little bit of a tangent, but
That's okay.
books have been written about the subject. So
My dad, when he came to Canada in 1980, he said his first mortgage was like 18% minimum.
yeah,
So
that's what it was back then. Exactly.
and that was the normal. So pretty crazy. Did you hear, Doug? Now Goldman Sachs and many other banks this month and past actually couple of months, they're laying off people, and it's not just a few hundred. It's thousands of people from a time, and a lot of them are from the mortgage department and the finance sector. What is that telling you when you see thousands of people getting laid off from banks from the mortgage sector?
Well, the problem is that even at today's roughly 6% 30-year mortgages, that's what it is in the US, it makes it very hard to buy a house, especially with real estate at near bubble levels. Interest rates double, it becomes unaffordable. And people that want to sell a house, well, they can't sell it unless somebody else can borrow the money. Real estate floats on a sea of debt. And that's very unstable. It wasn't so long ago, let's say before the 1930s, when the Roosevelt regime came on, if you wanted to buy a house, you saved up money and you paid cash for it. At best, if you put down 20%, you might get a financial institution to finance the rest of it for 5 years. So when a world is built on debt, it's very unstable, very tippy. And so, of course, they're laying off these mortgage people now. They're going to be laying off people everywhere. Look, the whole world is greatly overfinancialized. There are way too many people due to all this money printing that are involved in the financial markets, which really, they're necessary, they're important, but they're like 20% of the economy. That's insane. They don't produce anything that we can use. They just shuffle paper. So I think a lot of these financial types are going to be laid off. In fact, a lot of people generally are going to be laid off because there are huge distortions that have been cranked into the economy over decades by all
Mhm.
this politically allocated money printing. You're going to see unemployment go much higher in the next few years. This is going to be a very unpleasant decade that we're looking at.
Yeah, I agree with you. I think 2023 is going to be a tough one. Do you believe that's the final year we're going to see where all the rate hikes come into action with the layoffs, the recession, everything is in 2023? What do you think, Doug?
It's 2023 is not going to be a good year, but I don't see any good years for the rest of the decade. Why do I say that? It's because these governments and central banks have painted themselves into a corner, and all they can do to survive is print more money, which
Mhm.
is actually taking capital from the productive area of society and allocating it to themselves. Um, until you have massive deregulation, and by that I mean abolishing many government agencies
Right.
and rolling back laws that stop people from doing things and cutting taxes drastically, along with cutting spending drastically, and going to a sound money system, which would be based on a commodity, gold. Uh, they're going the exact opposite way now.
Hmm.
They're making things worse. The US and Canada are both, in effect, Sovietizing their economies. So the answer to the question, from my point of view, is no. There's not much room for optimism, except for the fact that hopefully technology will keep advancing apace.
Hmm.
Moore's law, that's really positive. Well, it can be positive. Depends on who controls the technology, of course. And the average guy out there, we're humans are wired like squirrels. We like to produce more than we consume and save the difference because winter's coming, that type of thing. But when the currency's no good, what are you going to save then? You
Yeah.
know, you're on a treadmill, and you're trying to run up a down escalator. So tough times.
Yeah. Well, Doug, we want to really appreciate you for coming down to Wall Street Silver. It's always a pleasure having you on, and hopefully you come back in 2, 3 months.
Well, and in the meantime, if anybody wants to get more, they can come to my podcast, which
Yes.
is on YouTube, Doug Casey's Take, or internationalman.com, where we have fantastic free articles. Or if they, over these cold winter nights, want some good fiction reading, they can read my novels, Speculator, Drug Lord, and Assassin, part of a series, more to come. So they're on Amazon. Buy them.
You heard that, everyone. We'll put your social media and everything in the in below, and your podcast in the link below, so everyone can just click on it in the description. And again, Doug, it was a pleasure having you on, and we hope to hear from you soon.
Uh, I can't wait to see what happens 3 or 4 months from now.
Yeah, us too. All right, take care, Doug.